Hey, we're going to try something different today. I'm going to talk a little bit over some screens to talk about the economy. Again, more stuff that I'm interested in, and to kind of walk you through my frame of mind or the way I think about these things. So recently, this week or earlier this week, the ECB talked about or made ways to. They said they're going to go ahead and cut rates again in September. Now, it's a European central bank. Why does it bother us? Well, our administration is trying to keep the dollar competitive with all foreign currencies, which, the euro is one of our main competitors. So if the ECB decides to cut their rates, the U.S. is likely to follow suit. Right now, the ECB rate, and this is another interesting thing people should keep in mind, they're at zero. And rates on deposits are negative 0.4. That means when you put money in the bank, you're going to get less out afterwards. You're basically paying them to hold on to your money. Now, you might think, well, then I'll just stop putting my money in the bank. If you're a business, you kind of can't do that, right? You need to keep money in the bank for operating costs and for transferring and buying and selling, all that stuff. So it's as if you're being taxed just to have a bank account. And that is not, it's incredible to think that there's negative interest rates. People didn't think that kind of thing could ever happen. And now they're doing it in Europe. And, are we headed that way? Well, let's take a look at what we're doing. Again, the Fed said, even though our economy is strong, we may go ahead and cut rates as well, just to follow suit with the European countries, the Asian markets, all those other currencies. We want to keep the dollar competitive. So we'll go ahead and cut rates as well if they're going to do it. Right now, the Fed rate is, we're at 2.5 for, the prime rate, right? So to bring it down, they're going to bring it down like maybe 25 basis points, 0.25. The thing is, this is not something that normally the Fed would do during a strong economy. It just never happens. Usually in a strong economy, they bring the interest rate up so they can slow down money. And the other thing to keep in mind, as the interest rate goes down to almost nothing, people's savings become worth less and less. You don't gain anything by putting money in the bank. You're not earning interest on it, or nothing sizable anyways. But the cost of items and goods, inflation, continues to go up. So if you're gaining 2% a year on your savings, but inflation is 2.5%, you've lost 0.5% of your spending power. That's obviously, and it hits like retirees and people on fixed income especially hard. All right, so we're at 2.5. And again, they don't generally do this when the economy is strong. So what are they thinking? Are they thinking maybe the economy is not going to be strong forever? Well, we've got all these antitrust suits going up against all the big tech companies. They're a major part of our economy, a major part of our stock market. So yeah, it's possible that's what might be heading down the road. They may be thinking that the stock market's going to take a big hit when these antitrust things come around. I actually don't think that's going to be a very major hit. I feel like this administration, like every other administration, is going to try to keep the economy pumping heading into the next election, because it just makes it easier to get to stay in office, right? And then as soon as the election is over, then they go ahead and bring us into a recession, so they have 4 years to bring it back up again for the next election, for the next candidate, in their party. So we got that to look forward to. The other thing to look at is, the House has approved this moratorium on a debt ceiling. For the next 2 years, there's no debt ceiling, right? Which means massive money printing, right? Well, it doesn't necessarily mean it has to happen that way, but it can. There's nothing stopping it from happening. We can just keep on borrowing more and more money from the Fed, pumping it into the system, and that has an effect, of course, bringing the inflation up again. And again, inflation is going up, but the interest rate is down next to nothing. You're not getting anything on your savings. What do you do, right? You're losing money every day just because of something like this, if that were to happen. All right, I'm going to switch over for a second. I'll come back to why that was all set up for this. This image is called the Wall Street cheat sheet. And the first time I saw this, it amazed me, because as soon as I saw it, I started looking around to find out if I could see it happen in real life. Like this is a graphic showing you the emotions and how markets are fueled by emotions. And then you go back and look, and I have an example, but you go back and look, and this pattern is repeated over and over again. So let's walk through real quick, right? We'll start over here with hope, or disbelief. That's a tail end and the very beginning of a market cycle. So, people we're going to come back to the disbelief at the very end. But what happens is market starts to rise and people start to get hope, right? Anything is possible. Recovery is possible. Then as that peak starts happening, you go, wow, this is really real. This is a real rally. So people start to get fully invested sometime around belief because they finally believe in it. They're in optimism. Some of them get in, but most don't jump in until belief. Then there's a whole bunch of people who jump in during the thrill and the euphoria. Like everyone says, oh, this is going to go up and up forever. So all people who aren't familiar, and I actually fell into this trap myself, they're not familiar with the market cycle. They start getting in somewhere around thrill and euphoria because they think it's going to rise forever. Well, the people who are really smart, who understand the cycle, they recognize what euphoria looks like with all these other people jumping in, all the noobs jumping in. So they start dumping when they realize we're at a peak, and they start taking profits. And then you get like a little bit of a jolt downward. Well, that scares everybody. But anyone who jumped in somewhere around the thrill line, as it gets down lower again, down to where it was during belief, they want to stick in because they want to see a rally before they get out. They don't want to lose money. So they hang around, and it gets kind of leveling off, and it comes back up to that thrill level, and it lasts for a little while. And that's, again, where complacency. People are thinking, okay, we just need a little bit of cool off, and then we can jump back in again. But again, by this point, the smart money knows what's up, and they start jumping out, leaving everybody who's not smart money, which is the average investor, in it, like for the whole down cycle. The anxiety, why am I getting margin calls? This dip is larger than I expected. Well, it's got to turn around sometime, right? Denial. I can't believe it's got to come around. It's got to turn around. It's going to turn around, and then panic. Everyone's like, oh man, I got to sell out. I got to get out. So the noob investor jumps in at thrill and jumps out at panic, right? Or capitulation, which is, down at the very bottom. So they're losing money constantly because they don't know the cycle, and they jump in when it's exciting when all the FOMO, the fear of missing out, hits them about that thrill and euphoria stage, and they jump out at panic and capitulation. Or if they stick around, they're in there during the whole angry period. And the angry period is when your spouse or your friends are like making fun of you, and you're like, I know, I should have gotten out, you're right. And very few people will hold off. They will have jumped in at thrill and will hold off through the whole anger, through depression. There's not a lot of people who do that. They basically sell off, lose money, and then walk away, never to come back. Depression lasts for a long, long time. And then it starts to rally a little bit, and people are like, disbelief, and they don't want to jump in during disbelief. If they're not familiar with the emotional cycle, they hang out and don't get back in again until it gets back up into thrill and euphoria again. And the same thing happens to them. If they don't learn their lesson, if they've never seen this sheet before, they're going to go through the same thing again. All right, I told you all that to show you this. This is what silver looks like on a 10-year cycle. How does that look? Familiar to you? Yeah, silver's doing it, right? And I'm in silver from I've actually been in since before 2010, but I did a fair amount of jumping in 2011, right? During that euphoria, thrill and euphoria. Well, mostly belief in thrill and a little bit in euphoria, because I was realizing I didn't realize it was topping out. I was topping out. So we're back again, right? So we're back at the beginning where it looks like it could be heading back into that disbelief stage. This is not investment advice. I don't think you should just take word of this one video. And again, I don't have that big a following anyways, that people are going to just start jumping into it. But it is an amazing thing to look back between those two and see how similar they are. Okay, so here's Bitcoin. Now, once again, you see that the rise up, that double peak where it's at euphoria and then back into complacency, right? You see that double peak, and then the long trail downward, right, into the whole bear market that lasts for a long time. It's lasted for about a year and a half. And now starting to rise up again. Now, is the rise that you see right there, by the way, the green line is, one of them is a market cap, the other's the US dollar amount. So they stay in tandem to each other, but you get the general picture. So is a double peak that's currently happening, like we're coming down from the double peak right there, is that the start of or the euphoria phase again? No, I think when you look at what you're seeing there at that point is really a larger scale and maybe even squeezed together version of this part of the cycle, right? And if that is the case, this is what some people are saying. If that's the case, like how far up do we have to go before we hit euphoria? Could be sizable. Again, not being one who predicts things, and I'm not one who knows markets really well, I find it really interesting to find this chart repeated, the Wall Street cheat sheet repeated in so many of these other cycles, and that's what we're coming into. So I guess that's why I continually talk to friends and to you folks about what to look into silver and to look into Bitcoin. It is about that time now. If inflation really is going to start ramping up because it's printing money out of control, again, I think there's probably some time. I think it doesn't happen until after the next election, after 2020, when this administration gets to secure their spot into the next 4 years. Then they'll go ahead and really start printing out the money and bringing the inflation up, and you'll start seeing a real rise in these other assets, these other forms of investments or money. That is my general advice. In the meantime, since you've got some years to get ready for it, you could buy some t-shirts, support the channel, or leave me some questions. Hit me up in messages, and I'm happy to answer questions directly if there's some things I can delve into more. I hope this video has been useful to you. I know it's just a quick run through some of the financial news that's going on, and it's not everybody's cup of tea, but it is certainly mine. I appreciate you hanging out with the Chaotic Neutral Gear channel. All right, like and subscribe, and that'll help me out as well. Cheers.